Have you ever wondered how the stock market performed on January 16, 2024? Let's rewind a bit and delve into the day when the market woke from a leisurely three-day snooze and investors were greeted with a lukewarm Tuesday. Major indices like the Nasdaq, S&P 500, and the Dow Jones Industrial Average took a cautious dip in the red. The Nasdaq, despite a minor slip, managed to outshine its counterparts thanks to robust semiconductor stocks like Advanced Micro Devices and Nvidia. The S&P 500, on the other hand, marked a modest retraction, while Boeing's struggles dealt the Dow Jones Industrial Average the steepest fall. The first trading day after a break can often feel like stepping into a cold shower. And this was no different, but it's not all gloom and doom. Amid the mixed performances, there were also sparks of resilience and potential. As the market reopened after a three-day break, it was a mixed bag of performances across the board. The return of stocks after the initial full week of 2024 has been noteworthy. As we watch the market's pulse quicken, the Nasdaq stole the spotlight with an impressive 3% leap. This surge was largely due to the robust performances of semiconductor stocks, such as Advanced Micro Devices and Nvidia. Not to be outdone, the S&P 500 and Dow Jones also showcased commendable resilience, appreciating by 1.8% and 0.3%, respectively. However, amidst these gains, there were also some noticeable dips. The Dow Jones, for instance, took a hit with a fall of 0.62%, largely due to Boeing's struggles. Meanwhile, the S&P 500 saw a modest retraction of 0.37%. Despite these ebbs and flows, it's important to note that this marks the 10th week of gains in the last 11, showcasing the market's overall resilience. This is particularly remarkable considering a CPI reading that overshot predictions. Despite a tepid reception to major bank earnings, the market continues to show signs of strength. Tuesday brought forth additional financial disclosures from industry titans. There was a buzz in the air as Goldman Sachs and Morgan Stanley, two giants of the banking world, shared their earnings. The market's reaction was a mixed bag. On the one hand, Goldman Sachs managed to surpass Zacks consensus estimates on key financial metrics, resulting in a modest uptick of 0.7%. This was due in part to an earnings surprise that approached 58%. On the other hand, Morgan Stanley was met with a chillier reception. Despite also exceeding Zacks consensus estimates, it faced a steep 4% decline. Both banking behemoths were not without their challenges. They grappled with declining investment banking revenues and significant charges, a trend that has been making waves in the banking sector. Other major banking entities also reported decreases, further stirring the pot. Despite surpassing Zacks consensus estimates on key financial metrics, both GS and MS grappled with significant hurdles. The volatility in stocks was further fueled by remarks from Fed Governor Christopher Waller. Waller, the latest voice from the Federal Reserve, made waves in the market with his measured approach to the anticipated March rate cut. His stance? Don't rush. Yes, rate cuts may be on the horizon for this year, but Waller warns against hasty decisions. Alongside Waller's cautionary words, the market also grappled with the climb of the 10-year Treasury yield over the 4% mark. This rise sent ripples through the stock market, echoing Waller's warnings. The Empire State Manufacturing Survey, conducted by the New York Federal Reserve, painted a similar picture, plummeting to lows unseen in nearly 4 years. But as one day ends, another begins, and with it comes anticipation. Market watchers eagerly await the retail sales data for December. After a November that outpaced expectations, all eyes are on December's numbers. Investors are also on high alert for earnings reports from key players like Charles Schwab, US Bancorp, and Alcoa. Their narratives could very well shape the market's next moves. Before we continue with our in-depth analysis, let's take a brief pause. If you're finding our insights valuable and want to stay ahead of the curve in this fast-paced market, don't forget to subscribe to our YouTube channel. By subscribing, you're not just joining a community of savvy investors, but also gaining access to regular updates, expert insights, and comprehensive analysis that can help you navigate the complex world of finance. And while you're at it, why not hit the notification bell too? That way, you'll never miss an update from us. Your support allows us to continue providing these insights, and for that, we're immensely grateful.